Peter Grandich of petergrandich.com and Peter Grandich Company is back with us. He's one of the guests we've had on that's been pretty much consistently right about gold. Last time we spoke, Peter, a couple months ago, you had allocated all your holdings into gold. After the price of gold has soared above $2,000, you tapered off a bit, then you went back in. But anyway, you made the correct call. We're here to get your thoughts on the political and economic landscape today and what investments you think will do very well. Peter, welcome back to Kitco.
Glad to be back, Dave. It's an honor to be speaking with you.
It's an honor to speaking with you as well. Let's start with the election. Big news item still, right? So contested election, not determined yet. As we speak now, Biden is pulling ahead in the electoral counts. So let's talk about some of his policies. He wants to make an executive order that wants to undo a lot of Trump's policies in the past. He wants to create a coronavirus task force. Some people are talking about the possibility of another lockdown before he reopens the economy. What do you think all this is headed, Peter? How do you think the economy will change?
Well, you're right on the basis that it continues and Biden becomes the real elected, or at least 50-point-something% people in America will believe he's the legitimately elected president. He certainly will have a completely different criteria than the previous president, Trump, has. A lot will have to do with how he'll be able to implement it, depending on or not if the Democrats can somehow get control of the Senate as well. I think the Republican plan behind the scenes is to win the Georgian at least one Senate race there, hold complete control away, and then watch the economy basically go in the tank over the next 2 years so that they could win back the House and eventually the presidency in 2024. However, if somehow the Democrats gain control of the Senate, I believe they'll be able to implement a lot of stuff in the next 2 years that could make that very, very difficult for the Republicans. So one of the first things I think people have to do is have to see what the results of the Senate election is. Based on the fact that Biden will start out as president, I do not believe he will be able to make 4 years. I believe his health is going to become a major, major issue if it isn't already, but to half the Americans. So I think it's going to be as important to think what you think potentially President Harris thinks as well as the President Biden. But there's no question that most of the things that were implemented by Trump will be looked to be unwound by Biden or Harris, who was ever sitting there. And that's going to, I think, impact the stock market, but even the bond market more, because I think no matter who is president, we are going to see snips of inflation again and stagflation. While the economy weakens, we'll see a bump up in inflation because of all the money creation, and that will just absolutely kill the bond market. So I actually, for the first time in decades, have turned bearish on our U.S. bond market and think probably have more potential loss in the bond market than we do in the U.S. stock market.
So impact the markets how, Peter? In a good way or a bad way?
Well, you know, the stock market is nothing what it was when I started 36 years ago. Back then, 90% of the trading was the general public. People bought it because they wanted to be part owner of a company. Now, in my opinion, the stock market has become a very sophisticated, highly technology-driven casino where 29-year-old quants are trying to implement the latest mathematical equation to beat it. Others are using words and headlines to trade it. And now there's 13 million new Robinhood traders who think sitting at home over these last 6 months have given themselves a new profession where they won't have to work other than to hit some buttons and make money, while high-frequency traders are making billions of dollars off of their trades. So eventually, markets will return to fundamentals. And there's no question now that America is clearly at its most divisive period other than possibly the Civil War. Both the economy and social and political situations have never been worse, in my opinion. So eventually the stock market will be brought down towards the reality of Main Street rather than Main Street getting caught up with the stock market, in my opinion.
All right, we're going to talk about both those things. So the divisive politics of our current environment, and also the stock market. Let's talk about the stock market first. The counter argument to what you just said, Peter, is just that, well, the millions of people pressing buttons on their app, the Robinhood app, doesn't that make the market, Peter? Doesn't that provide liquidity? Isn't that a good thing?
I think it's more like a Ponzi-like scheme. So as long as they all remain kind of in the same camp, you're right, the market can go higher. I haven't done much in the market. I started the year off short. I went long near the bottom in March, but since 3,000 on the S&P, I waited for Dow 30,000 to get short again. So in the perfect world, these Robinhood folks could do me a favor and help get the Dow above 30,000. And I think once that happens and all the celebration from the Don't Worry, Be Happy crowd takes place, fundamentals will hit hard. The economy is going to not have the V shape, and we've not had what people had thought 6 months ago would happen. I think there's so much damage done to the U.S. economy and to a lesser extent around the world that eventually the weight of reality of fundamentals at companies will outweigh how many buttons and 18-year-olds can hit and try to trade stocks on. And as much as that may be liquidity now, it'll actually come back to haunt them in the coming months. But that may still be a few months away and a few thousand Dow points higher. But it's certainly not a time where I think you want to first become an aggressive general equity holder looking for the Dow to go up another 50 or 100% over the next few years.
So you don't think we have a V-shaped economy? What indicators are still lagging in your opinion, Peter? I'll just point out two things. So third quarter GDP grew 33% on an annualized basis. So we're still not at pre-COVID levels, but it was a tremendous growth since the second quarter. And also retail sales from the St. Louis Fed data came in, and retail sales have continued to rise despite a pandemic. But clearly you're looking at other indicators as well that point to a drag in the economy.
Well, we can just look at the same two you just mentioned, Dave. Sure, we've had a rebound, but a rebound from where? And how many people participated in that rebound? And how many people are permanently out of the game? We know so many businesses. Part of my main business now is dealing with small to mid-sized business owners across the United States. And in the last 60 days, they have expressed real concern about the viability to continue in the manner that they are. And it's taken trillions of dollars of stimulus money, which the cocaine-induced stock market will kind of look for again for another stimulus package, which I think will be much more difficult to get across if the Republicans maintain control of the Senate. And we now need trillions of dollars printing in money just to sustain an economy for a few more months. And we're getting to the point where sustaining and servicing the debt here in the U.S., whether it's on the U.S. corporate level or on the personal level, is becoming unsustainable. So, and that obviously takes us to the alternative. And that's why I think when we do talk about gold, you'll see that there'll be another leg up in gold market and also alternatives like cryptocurrency, what have you, because people are going to continue to lose faith on the ability for the United States to service its debt levels.
Let's talk about your prior involvement with sports first. You were involved with the professional sports industry, but are no longer. It ties into your thesis about our divisive political environment. Now, as an investor, you're looking at politics. We as investors, we have to factor in a political risk premium, right? And so when you're talking about a divisive political environment, how much does that add to the premium? So let's tie this all back to your involvement with sports. Where do you see the political environment now? How do you factor that in as an investor?
Well, you're right. There is no more middle, at least here in the U.S. People are very much on one side or the other. And for me, after almost 20 years of having a sports division to my company where we dealt and serviced current and retired professional athletes, earlier this year I had 21 current professional athletes that we serviced both in the NFL and the NHL. But because of what transpired in the BLM movement down here and how both players and teams embraced it, as a devout Catholic Christian, I found it would be very hypocritical of me, on one hand, to spout my personal religious beliefs and at the same time be supportive to groups and individuals who were supporting an organization that literally despised my faith. So I made a very tough decision. It was a very hard economic decision. And I ceased working with professional athletes and teams. But I think that is part of, and believe it or not, was one of the underground swellings for Trump, in that there were people that felt that the country had become too divisive, defunding police, seeing the rioting, seeing the fear of even be able to go outside. And I don't think that's going away. I don't think just because Biden has apparently won that somehow all that's going to disappear. In fact, I feel that those groups will be emboldened by this and will take even more opportunity to get what they think is a proper message across. So I believe there's more divisiveness to come and more unfortunateness of suffering by people in this, and that is going to help drive the next most important election, which will be the congressional election in 2022.
When you're looking around at everything you just mentioned, as an investor, does that drive your sentiment of fear?
Well, the things that no one wants to talk about, and I hope you don't mind me saying it here, is we can't lose sight that America, at least at one time, really was built on a Judeo-Christian thought process, even though that's deteriorated a lot. But there's still enough people who put faith as an important part of their decision making. And that's one of the things that I think that the underground swell that we'll see more of in the next election, because one of the things that's being attacked in these fears of lockdowns, Biden speaking of another lockdown here in New Jersey, we've just been more locked down than we were a few days ago. And one of the areas that's getting locked down is where people can practice their faith. And so no matter what faith that is, the fact that is handicapped or held back, or it's being viewed that they're not allowed to practice it, I still believe there's enough Americans that will be troubled by that, and that'll become a driving force in whatever you want to call it, the opposition or what have you, and become a vocal point in the next election.
Does any of this have a factor on whether or not you're going to buy more gold or less gold?
Well, I never buy gold, David, for the fear factor. I know there are people that buy it because they think if things get really bad, they'll be able to get a loaf of bread or be able to go from one place to another, versus people that don't have it. And I always believe that is the case. Those who don't have it will find the ones that do have it and take it from them. So I don't own gold, or when I speak to you about being bullish, I own it for capital appreciation potential. And there I still believe there's an enormous opportunity in it, but things have changed somewhat. I think there's more of an opportunity now in the companies that look for it and develop it and mine it than the actual ownership of the physical bullion.
So let's talk about gold now for capital appreciation. Now, as I mentioned before, last time we spoke, not too long ago in the summer, you had allocated all your assets into gold, 100% gold portfolio. Are you still in that allocation today?
Well, you're right. In 2018, actually, in the summer, I made a decision. I left the general equity market, all but one, and went into overweighted in physical bullion and owned mining shares, and rode that to just under 2,000. And then I sold mostly everything and have since gone back into it. And in recent days, have stressed mining shares over physical bullion. While I believe physical bullion has another 20 to 25% higher, because mining companies see most of an increased price go to their bottom line because things don't change much just because the price has changed. The opportunity to see a higher percentage return in mining shares is much more likely than you're going to see in the physical bullion. And if I can, you did an interview a few weeks ago. I called it and I posted it. And this is not a stroke. I don't need to be on here. I'm appreciative I'm on here, but I'm not looking to get you happy so you have me back by saying this. But it was I called it the 10 best interviews I ever heard in 36 years. And the gentleman's name was David Farrell, I believe, who used to be with Gold Corp. And everything that was said in that interview, the questions you asked, and most importantly, the answers he gave, is exactly why you need to own bullion and mining shares. I've literally used it in lieu of sharing with people why I think they should own gold. I say, watch this interview, and if you don't agree with it, then don't follow me, because everything the gentleman said was spot on, in my opinion.
Well, thank you. I appreciate your comments. Let's talk about some of the points that David Garofalo made, and maybe you can elucidate on why you agree with him. So his outlook is that there's going to be a lot more M&A in the space, particularly within the juniors and the mid-tiers, because the gold reserves, the gold sector as a whole is facing an existential issue, is what he said, because gold reserves are drying up. There's going to be fewer ores in the ground, and so the industry needs to consolidate. So more M&A is expected. Let's talk about that, Peter.
Yeah, he's absolutely right. It's something I've written about and spoken about in recent weeks. We saw it yesterday. A company I was once one of the largest single shareholders, Tarango Gold, is now in talks with Endeavor. You're going to see this more and more. In fact, I think one of the things that you're also going to see is it's become very tricky to work in a lot of areas of the world. When I started 30 years ago and you looked at a map, you pointed to a few places you didn't want to go. Now you point to a few places where you only want to go if you want to be in mining. And one of them is right in your backyard, Quebec. I mean, I think there's a great gold rush happening there. And so the mergers and acquisitions, I think, is only going to continue. I think it's going to filter down to the emerging producers. And I even believe now that even the junior resource market, or what's left of it, we'll see more and more interest as money has flowed back into that market after years of staying out of it.
Well, why do you think the miners will outperform the bullion?
Well, let's give an example. Let's use $2,000 to make it easy. Say gold is $2,000 and it goes to $2,500. I believe that's 25%. Because almost all of that gain will go to the bottom line than the typical mining company. It won't cost them a lot more to get just because the price went up. You'll see that the earnings growth be bigger than 25%. So if you're going to believe gold's going to go up, then you have to be at least evenly weighted, if not overweighted, in the miners going forward, because now where the leverage of being a producer really comes into play. And as also was pointed out in an interview, that the majors and significant producers have become much leaner. They've become better capitalized. They've recognized not to get caught up in gold rushes and buy everything that they can in a moment's notice. So everything is almost like a near perfect storm for gold mining companies at this point in time.
Can you tell us a few companies that you like?
Well, I'm very high on the Quebec gold rush that I literally only discovered myself earlier this year by getting reinvested into a junior that I think I'm the largest shareholder, or nearly, a company called Vanstar Mining, and it has a joint venture with IM Gold. But whether it's Amex Exploration, there's three companies that I would just tell people. And again, I'm not here to tout it. I'm speaking my own book, because I'm just talking my own investments. But the fastest one of the three that I think it will be taken over is Amex Exploration, AMX. I mean, just the phenomenal discoveries continue. The news today about the metallurgic being so great, just going to have to be gobbled up. The next one, obviously, is Vanstar Mining, VSR. Just an incredibly undervalued situation it's so rare in juniors to have both stake and sizzle. You normally have one or the other, but in this particular case, we have both. And then finally, a company that just made a major discovery hold just a few days ago. I think I'm in the top 10 of holders of it, called Northern Superior Resources, SUP in Toronto. All three of them, I see them as takeover candidates in the next 12 to 24 months. Obviously, why I have such large positions in them.
All right, well, let's talk about the risks to gold and gold miners now. As you know, both of those, the bullion and the gold miners, had a rough start to the week. This week, as we speak, right, as you know, the vaccine news came out from Pfizer that their vaccine they announced 90% effective. Do you see that being a risk to gold and miners going forward, or was the reaction this week overblown?
Well, I think on the short term, I've talked in the last 2 days that the 1850 area is a critical area for gold to hold, and at least to the end of this week, through all this overreaction to a vaccine that may or may not work. And news coming out today shows the potential real difficulties of even getting it out to the general public. But having said that, I've never believed that gold has risen these months because of COVID. I believe gold is rising for one main reason, and that is we have a Federal Reserve that just goes like this at the printing press, and is going to have to go faster and faster as time goes by. And it is debasing currencies worldwide, and they're not alone in what they're doing as central banks. And between that and cryptocurrencies, there's a movement to move away from general paper currencies, and that's what I believe is ultimately the driving force. So while there may be pullbacks, and if we do break the 1850, as I said, we can even go back and test the 200-day moving average in gold in the high 1700s. But gold has a $50 to $100 risk to the downside, and it has, 500 or more to the upside. So when you have that type of risk reward, in my view, you have to buy these type of companies on any significant pullback to begin with. So I'm not worried anything past, if anybody's looking past the next few days and into 2021, I think these are opportunities here, not to be concerned about having to change our thoughts.
All right, so buy the dips and hold for the long term. I understand. What about uranium then? Do you have the same thesis for uranium?
Well, now you're into something that I never thought in 36 years I would say, because up until most recently, I never had an interest in uranium. But I am, and according to fellow followers on Twitter, now officially a uranium bug. I think it's the perfect storm has come together for it. The amount of need is going to grow great. The supply has been greatly dwindled down. It's so hard to find any real interest other than the handful of people that remain from all the false starts that it's had over the last several years. And the most interesting thing is, if you believe in the prices going higher, you can literally count on one hand the companies that actually produce it and will benefit from that. And so I've made Cameco, obviously a Canadian-based company, CCJ down in the US, CCO up in Toronto, as the ultimate stock to own if you're a uranium bug. And they, along with one or two other companies, will most benefit. I will caution this: I don't follow the juniors, and there's always dozens, if not hundreds of them. But I will remind everybody, back in 2006 and 7, when uranium went through the roof, there were a couple hundred junior uranium companies all hoping to become the next uranium mine. And maybe on one hand or two, you can count all that did. So I would caution that while they can all go up, if I'm right about the uranium price, I think you need to be greatly overweighted in the companies that actually produce it now or are close to producing it now, than uranium juniors who may never get to participate in this cycle and have to wait for the next cycle before they're mined, if it ever comes into production.
Great, fantastic. Well, despite our nation being divided over politics, I think one thing we can all agree on is that the Canucks is a great hockey team, right?
Well, I once had a bounty.
I'm only bringing this up because of this bet that you were talking about to me earlier.
Well, I once had a bounty put on my head by a radio broadcaster in Vancouver, because I used to beat up the Canucks by saying that what team ever playing them is going to be fearful of a name Canucks coming into play them. But I only hope for my friends still up in Vancouver that someday they get a chance to experience what we here in New Jersey got to experience 3 times, and that's the Stanley Cup.
Well, all right. Let's see if that happens. Thank you very much, Peter, for coming on the show. It's a pleasure speaking with you as always.
All the best, David, and you're doing a really great job. You're doing a really good job. It's very, very informative, and I watch and read Kitco every day.
Well, thank you, Peter. It's an honor to speak with you, and I hope to speak with you again. It's people like you that inform our readers. Thank you very much for watching. I'm David Lynn. Stay tuned for more.